Welcome to our video. In this video we are going to explain the different types of income that are assessable for tax purposes in Australia. Taxpayers must declare the income they have received for each financial year in their annual tax return. However, employers and financial institutions like banks already provide the information directly to the ATO, and it is pre-filled in taxpayers' tax returns, but you should always ensure that the information is accurate. The types of income we will review today include employment income, superannuation pensions, government payments, investment income, business income, partnership or trust income, and foreign income. Employment income is money associated with the taxpayer's employment and includes salary and wages, commissions, bonuses, parental leave, payments from an income protection or sickness, accident insurance policies, and workers' compensation schemes. Allowances paid for car, travel, clothing, laundry, meals, and working conditions. For example, danger or height, qualifications, or special duties. Not to forget, tips, gratuities, and payments for services. Payments for voluntary services are also assessable. A lump sum payment is a one-time payment that is taxed and reported differently to salary and wages income. A lump sum payment can be paid for an employment termination payment, genuine redundancy, unused annual leave, long service leave, or special leave that is owing when a taxpayer leaves their job. These payments need to be declared on your tax return as well. Reportable fringe benefits given to you by your employer, such as a work car for private use purposes, a cheap loan, or a free private health insurance. Reportable super contributions made on your behalf by your employer. You don't have to pay tax on these items, but they are used to work out whether you are eligible to receive a range of government benefits and tax offsets or not. Income received from pensions paid as a superannuation income stream and annuities is assessable. A pension is a series of regular payments made as a super income stream. This does not include government payments such as the age pension. An annuity is usually a series of regular payments made to you by a life insurance company in return for a lump sum payment. There are certain Australian government payments such as pensions and allowances that must be declared in a tax return. These include age pensions, carer payments, or study, New Start, youth allowances, disability support pensions, sickness allowances, and parenting payments. Investment income you must declare interest, dividends, rent, managed investment funds, and capital gains. If you're an Australian resident and you receive interest, you must declare it as income. Interest income includes interest earned from financial institution bank accounts and term deposits, interest earned from any other sources including penalty interest received on an investment, interest paid by the ATO, and interest from foreign sources. A dividend can be paid to you as money or other property, including shares. If you receive bonus shares instead of money, the company issuing the shares should give you a statement showing if the bonus shares are a dividend. Some dividends have imputation or franking credits attached that you must also declare on your tax return. If a company pays or credits you with dividends that have been franked, you'll generally be entitled to a franking tax offset. You must declare the full amount of any rent and rent-related payments that you receive. Such payments include rent you receive from renting out a room or a whole house or unit for an extended time basis or short time basis through a website or application. Rental bond money if you become entitled to keep it. An insurance payout to compensate you for lost rent. A reimbursement or recoupment for deductible expenditure. For a co-ownership, only include your share of rent and expenses on your tax return. You can refer to our video on rental properties for further information. You must show any income or credits you receive from any trust investment product on your tax return. This includes income or credits from a cash management trusts, such as a property trust, share trust, equity trust and growth trust. Generally, your capital gain is the difference between your asset's cost base, what you paid for it, and your capital proceeds, what you received for it. You can also make a capital gain if a managed fund or other unit trust distributes a capital gain to you. A capital gain is treated as part of your total income and not taxed separately. You can refer to our video on capital gains tax for further information. The net income you receive from carrying on a business is assessable income and you need to declare it on your tax return. If you're an individual running a business, you must declare the income you earn from your business on your own tax return by using a separate business schedule. You don't need to lodge a separate tax return for your business. You can refer to our video on small business for further information. If you are a partner of a partnership, you must declare your individual share of the partnership's net income or loss in your individual tax return. If you are a beneficiary of a trust, you must declare your trust entitlements in your individual tax return as well. If you're an Australian resident for tax purposes, but you are taxed on your worldwide income, you must declare any foreign income in your income tax return. You may receive foreign income from pensions and annuities, business activities, employment and personal services, assets and investments, and capital gains on overseas assets. Your foreign income could be subject to double taxation if tax is withheld in the source country. To overcome this, Australia has a system of credits and exemptions and has signed tax treaties with more than 40 countries. You can refer to our video on foreign income for further information. As you can see, there are a lot of different types of income that are assessable in Australia. Hopefully after watching our video you know what you have to declare. Thank you for watching our video.